Hello, investors and traders, and welcome to the Midweek Market Report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I zoom in here, you can see that we have a nice green candle right there. The volume isn't anything spectacular. In fact, it looks like we're going to close with slightly lower volume. I'm recording this just minutes before the market actually closes, so we're getting a little bit of an eyeball on an active market here. But take a look at what we have to the left. We have a resistance area here. We have the most recent resistance area here. So if you have the volume dropping on the way up, remember what I said last week, and if you didn't get a chance to catch last week's report, I used the kite analogy to describe the importance of volume and how we use that as a leading indicator. So again, if the volume is dropping on the way up, that is taken as a bearish signal. If the volume was increasing on the way up, it would tell us that the bulls are more excited and that we would most likely look for higher prices down the road. But right now, we're at these resistance points and the volume is dropping. I have a downside target on DIA still in place right there at 425.51. I'm not moving that. And if you look at the weekly chart here, this is a 3-year weekly chart, you can see what I'm talking about with regard to this topping. This is more or less like a double top. And look at the weekly stochastic and the CCI down here. The weekly stochastic is overbought. Remember, when it's over 80, that's overbought. And down below, the CCI is actually going down. It's pivoting down while the price has been going up. That is a major divergence that you have to keep your eyes on. And so that is DIA. If I look at IWM, you're going to see here's the weekly chart. We're having a hard time with that 20-week moving average. And again, down below, you can see that the CCI is pivoting lower. Going to the daily chart, you see here we have very close to a hanging man, which is bearish. Again, at a resistance point right there on lower volume. Again, the lower volume on the way up tells us the buyers are losing some of that momentum. So I have this target down here at 220.23. We actually missed that by about 44 cents right there. Came very close to hitting that on Monday, but I am keeping that downside target at 220.23 because we're more or less stuck in a range here. And I think we're going to revisit those lower prices. So our option traders are geared up with negative delta, looking for more bearish moves in the market, and they have pretty much hedged positions. I'll get to that in a moment. But again, downside target on IWM, again, still 220.23. Looking at the Qs, ticker symbol QQQ, you can see again, we came right down to this low here. That was a low of 511.05. My downside target is 510.16. So we came within $1 right there. And I said we would most likely come back to test this low. So that's why I drew that out. And remember, last week I drew a horizontal line. I converted that to a dotted line for those who are going back and listening to the recording, so you can see the difference between those two lines. But I still have that downside target right there at 510.16. We filled this gap perfectly, pulled back after the gap fill. And again, look at the volume. That's the leading indicator that I've been referring to throughout this recording. Increase in volume on the way up would be bullish, but we're seeing the exact opposite, a decrease in volume on the way up. Now, we don't have a pivot on the CCI, but we do have a slight hinge. Let me magnify that for you so you could see the difference. A hinge is just a slight change in the direction, while a pivot is more or less a reversal in the direction going the other way. The hinge is more or less the prelude to a pivot. So that too is taken as a sign of weakness. And so if we get a drop in volume tomorrow combined with a red candle of any kind, then you're going to see that CCI pivoting right back down, most likely crossing below the zero line, which is that black line. That's also known as the momentum line. So if we get that cross below, we can expect 2 to 4 days of movement in the direction of the cross, just like what we saw here. On Monday, we crossed up over that zero line. And what do we have after that cross? 2 days, at least right now, 2 days of upward momentum. I tell this to all of our members over and over again. When the momentum line crosses, you generally get 2 to 4 days of movement in the direction of the cross, whether it be upside or downside. Expect 2 to 4 days. So we're already at that 2-day mark. We'll see what happens throughout the rest of the week. We only have 2 more trading days left until Friday, and I think we're going to see some pivoting right across the board. So again, downside target on Qs still in place right there at 510.16. Looking at SPY, you have same story. Drop in volume on the way up. We have a resistance area up here. We do not have a hinge, however. We do not have the hinge or a pivot on the CCI down here. So this could be interesting. I think we could see a little bit higher tomorrow before a possible pullback on Friday. But my downside target here at 590.63 hit like a champ from last week's report. The low was 590.49. Again, we surpassed that and hit that target precisely. So I will keep that as a downside target once again at 590.63. I think we're going to revisit that support level here, and we're more or less stuck in a range. Now, I want to talk a little bit about the VIX, and this is why I think the S&P could go up just a little bit more. See this red candle here on the VIX? We have almost no shadow at the bottom of that. So I think we could go a little bit lower tomorrow on the VIX. And I know this is a bold call, and I'm sticking my neck out on this one, but I do believe that while the VIX could go lower, I think we will close with a green candle on the VIX tomorrow. So keep an eye on that, because once we hit this support level, which by the way is a gap fill support level, I do think that it's going to start pivoting up, which remember, for the most part, the VIX is inversely related to the S&P. So again, a little bit higher on the S&P, but different from what I said in diamonds and the IWM and the Qs. But I think the VIX is giving us that signal that we could drop a little bit more and the VIX go a little bit higher, and then the reversal from there. Again, inside 1 minute here until the close. Let me talk a little bit about silver. If you're following me on X, you'll see that I put out my post. You could use hashtag AJSLV trades, and you'll be able to find what I'm doing in silver. I put my trades out, make that public. I bought all of my silver back right here on this day at 28.22, which is 2 cents off the low. Right now, I think we could see a little bit of a pullback in SLV. So for those of you who are looking to take possibly a short-term profit and then get back in to parlay your position, that's obviously your decision to make. I'm choosing to stay in. I'm not going to take a chance of selling it and then trying to buy it back only to have it go a lot higher. I think it's on the launch pad, getting ready to go. Speaking of going, here is the close of the market on this Wednesday, February 5th. Remember, tonight from 6 to 7, I have the rapid fire stock analysis session. Each and every week, I go over 50 to 60 stocks. I'm actually trying to keep that at 50 stocks to keep it at a nice pace for our members. And you can see here last week on January 29th, we had these stocks submitted to us by our members. We're using first name only, obviously, to protect identities here. But you can see the green areas are the targets that have already hit in 5 trading days. So since last week, 46% of those targets have already hit. Going back 1 week prior to this one, we had 72% of those targets hit. I shoot for 70. A lot of times I wind up better than 80. And you can see all the green that's on here. And if you want to participate in this, every Wednesday we do this rapid fire. And you can participate by putting in your own ticker symbols and joining. We have a 15-day free membership, no strings attached. So you could just jump right in there. You could either listen live or listen to the recordings and have a lot of fun in the process. So thank you, folks. You have a good rest of the day. I'll talk to you on Friday on the Weekly Market Report. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.